Good morning. Welcome to Forex in Four. Today is Friday, September 30th, 2011. All right, so we're looking at the euro here. We've got some risk aversion going on in the markets to start the day. We had some selling happening from yesterday afternoon. You can see here, euro got up and it tested that R1 resistance area on the daily pivots, right, just shy of 137. So you can see here we've been trading a pretty obvious range recently in the euro for the past, week or two. 134, say 137 high. We've been in that range. So what's happened? Well, we know about the vote in Germany yesterday, but there's been a lot of, I don't want to call them complications, but, there's still a lot of, talk going on and things that are seemingly not making a ton of sense over there as far as how this EFSF thing is going to be handled. They voted to give Greece the next tranche, but now they're saying that's not going to be enough money. Now there's strikes in Greece. They can't let the Troika in, the Troika being ECB, the IMF, and the European Commission. So they're having a problem getting to these meetings, and it's just like excuse after excuse. And of course all of this comes just before the weekend when people are afraid to hold on to risk assets because you just never know what's going to happen. When markets are closed, boom, you could wake up on Monday with or Sunday with a very nasty problem. So you see a lot of risk aversion on Fridays these days, and that seems to be a pretty common theme. Monday, Tuesday, okay, we made it through the weekend, let's do some buying. Okay, Wednesday comes up and then it's like, what do we do on Wednesday? What's happened? Are things better or are things worse? All right, if things are the same, that's the same as being worse, so let's start selling. Then you see a Thursday sell, and then you see a Friday sell. So that's sort of a common theme that we've been seeing. But you can see here, euro pulling back. And it's interesting that that's going on because inflation reports in Europe, CPI came up much higher than expected. They were expecting a 2.5% for the month of September. They actually came in at 3%. So it shows that inflation's picking up there rather quickly. Normally, the ECB is pretty intent on fighting inflation. So people would say, all right, well, that's good for the euro, but not in this situation with what's going on with Greece and the rest of the area. So looks like we're still going to trade this range in euro. Just want to show you some other things here. Dollar yen, let's look at this real quick. You can see we've still been in this range. Yesterday I identified we touched just up over 77 there. It looks like we're approaching that again. All right, we're getting a little bit of dollar strength. They actually had some decent news in Japan overnight that came out. They had consumer prices, which came in a little bit better than expected. The jobless rate actually ticked way down. They were expecting 4.7% jobless. They got 4.3%. All right, and industrial production figures rose not as much as expected, but they're saying now that they're back to close to pre-tsunami levels. So that's a good thing for the Japanese economy. All right, how that's going to work moving forward is anybody's question, or everybody's question, I should say. But also to note is that recently, they talked about the intervention fund over there being expanded. So they're trying to jawbone the dollar, or excuse me, the yen, and we'll see what happens in Japan there. Just want to show you the Kiwi. Let's just back up. We're at a 6-month low here on the Kiwi. Okay, S&P just downgraded New Zealand's credit here, and they've got some weakening data coming in. So it's no surprise there we see Kiwi sort of selling off. I'll show you the Aussie. Okay, pattern looks about the same. Okay, you can see that. Looks like this bear flag pattern has completed, and it's we're going to have to see where we're at with the Aussie as well. But the idea is that China's slowing down. Okay, their PMI is coming in flat, so they're not growing anymore. And if China's not growing, then where's the global growth going to come from? We know it's not coming from the eurozone. Okay, they're under austerity for half of the area. You got the UK under austerity. All right, the US is floundering as well. So we don't really know where we're going to get this global growth from if China slows down. So we got Aussie selling off. So it's basically, you can see here, oil pulling back as well. We've got this, global slowdown fears going on. All right, no real, confirmation of anything happening in the EU that's going to sort of right the ship. So, people are concerned about that. It's Friday. We don't want to go into the weekend holding these risk assets if there's going to be a problem. So we're seeing dollar strength. Okay, we're seeing stocks sell off quite a bit. We can look at S&P right here real quick. Okay, you can just see here, S&P down towards the lower end of the range. All right, we're on the daily, but we're getting back down to these 1125 areas. Obviously, 1100 is that sort of psychological area of support, but I'd say that probably 1125 is a little bit better of an area of technical support. So, that's kind of what we're looking at. Later this morning, we are going to get Canadian GDP. All right, just look at dollar CAD real quick. Where the heck is it? Dollar CAD. Thank you. And you can see here that dollar strengthening versus loonie. And okay, wow, we're up to 105 here. So we far exceeded that parity level. And people who thought it was coming back here, looks like they got those shorts got blown out. So we're waiting on Canadian GDP. They're expected to show a 0.3% gain for July. Year-over-year numbers 2.3%. We'll see what happens. And then in the U.S., we're going to get personal income, personal spending, and the University of Michigan confidence figures. So, I'm not certain who is going to be all too confident at this point in the game in the U.S. economy. All right, we know about the problems, and part of what's going on around the globe, and it's unfortunate, but people are running around, and there's just so much. People don't know what to do, is what it comes down to. And I think, especially here in the U.S., when you have a bunch of people in Congress who are charged with fixing these problems, and they really don't know what the heck they're doing, it's difficult to get things done. And you have this ideological debate about which way to go. And while this debate drags out and nothing gets done, all right, things start to get worse. It's kind of like you got a leaky roof. Okay, and you don't fix it. If you fix it right away, yeah, the upfront cost is it's a hassle and it sets you back. But you know what? Long term, you're not going to destroy the rest of the house if you don't do anything. So, we've got this leaky roof going on in the global economy, and nobody seems to be willing to fix it at this point in time. So it's going to be interesting to see what happens. But we've got the end of the quarter happening here, end of September. So we're going to start to see earnings season in the next week or two for U.S. stocks, and we'll see if the correlative effects there can do anything to strengthen the market. But stock, if these earnings start coming in worse than expected, then we could be in for some further dollar strength. So that's what I'm looking at. Have a good weekend, everybody, and good trading to all.